Hi, Denise Naylor here, and welcome to my video series, House Purchase Loans Buy Your Own Home, Part 2, Right to Buy for Council and Housing Association Tenants. In Part 1 of my series, House Purchase Loans Buy Your Own Home, Building Society Mortgage, I described how the growth of mutual organisations from the 1850s onwards enabled the growth in home ownership in the private sector that we've had in the United Kingdom. Today, thousands of house purchasers borrow funds on a mortgage from building societies to buy their own homes. In the late 1970s, the UK government introduced a policy of enabling council tenants to buy their own public sector homes. This policy is known as the right to buy. Whereas building societies give you a return by paying you interest on your savings, and in turn enabling you to borrow funds for your own house purchase, right to buy can be thought of as a return on the rent paid to your public sector landlord. The policy was immediately very popular with council tenants, and people soon called for the right to buy to be extended to housing association tenants. This proved a bit more tricky because housing associations are varied. Some are private companies, some are mutuals, and some have an added layer of charitable status. This creates many legal issues. Today, you cannot guarantee that you will have automatic right to buy, so check the small print. Housing associations have been around for about 100 years. My own story is how, as a tenant of the St Pancras Housing Association, now part of Origin Housing, my housing association tenancy got me onto the housing ladder. Founded in 1924, the St Pancras House Improvement Society was set up as a limited company to raise funds for rebuilding homes in the Somerstown area of North London, close to Euston Station. The aim from the beginning was to make a profit and pay dividends. By the time I became a tenant in 1980, the society had changed its name to the St Pancras Housing Association in Camden, was a registered friendly society and a charity. Since charity law normally prevents charitable housing associations from selling their homes, separate legislation was passed by Parliament to allow a transferable discount to tenants of charitable housing associations. I could not buy my own home from the housing association, but it worked like this. Funds equivalent to my discount were made available to me to buy a similar property on the open market. And that's how I got onto the housing ladder. So how do you buy your own home with a right to buy discount? Well, you need to be the named tenant of a qualifying association and have lived there for a specified time. Once you meet residence criteria in your public sector house, you can apply. Your discount is calculated according to a formula based on the market price of the property and how long you've lived there. Normally, you must remain the owner of the home for a stated period of time in the contract after your purchase for the discount to give you full benefit. If you sell up early, you could be liable to repay a proportion of your discount. The right to buy discount has been a source of cash for home purchase for thousands of tenants. So if you are a tenant of a qualifying public sector property, take advantage of your right to buy. Thanks for listening. In part 3 of my series, House Purchase Loans Buy Your Own Home, Borrowing from a Bank, I'll talk about how the banks got in on the booming housing finance market in the 1990s and how they nearly brought the market crashing down. Do join me again.